Treasury Secretary Henry Paulson says the U.S. should cut corporate taxes to help boost the economy. He says the current tax system is hurting productivity, job creation, and making it difficult for American companies to be competitive in a global market. His comments come ahead of a conference that he is hosting next week to take a closer look at our corporate tax system. Is the U.S. corporate tax code hurting America? Joining me now from Allentown, Pennsylvania, Pat Toomey, president of Club for Growth, and from Washington, Jason Furman of Brookings Institution and a former Clinton economic advisor. Welcome, gentlemen. Nice to have you here.
Hello.
Pat, you think that this is just the right solution to what ails the U.S. competitiveness. Why?
Well, absolutely. Secretary Paulson correctly points out that back in the 1980s, Ronald Reagan led a round of personal and corporate tax cuts that helped usher in a tremendous economic expansion that continues to this day. The problem is, on the corporate side anyway, the rest of the world has kind of figured this out. And today, we have about the second highest corporate tax burden on average in the entire developed world. That systematically puts us at a disadvantage because, after all, corporations don't get to print money to pay these tax bills. They have to get that money by charging higher prices for their goods and services. That makes them more expensive. It makes it less easy for these companies, makes it more difficult for these companies to attract capital. And capital, of course, is the driver of productivity.
Okay.
So if we lower taxes, it's going to help the economy.
All right, Jason, you feel like he has identified a legitimate problem, but this is not the right solution. Why?
And this gets to the use of Pat's term, tax burden. The tax rate, statutory tax rate facing American corporations is the second highest in the world. That's a very big problem. The tax burden facing American corporations is among the lowest in the OECD.
How do you differentiate those? Explain the difference.
We have a lot more loopholes than other countries. We have a set of depreciation rules. We have a set of overseas rules that allow you to shelter your income overseas. All of these other rules in our corporate tax system allow you to avoid actually paying taxes at those rates. So what we need to do is, in the spirit of 1986, which Secretary Paulson talked about in his op-ed, bring those rates down, but at the same time broaden that tax base so you can really collect those taxes, but collect them in a more efficient manner than we're doing so today.
What about that, Pat?
Well, there's a lot. Well, I'm glad to hear that Jason talked about simplifying. He's absolutely right about that. You know, corporations end up having this deadweight cost of at least $40 billion a year just figuring out what they owe. But I would disagree with the idea that we want to have a corporate tax burden at all. It just doesn't make sense. Even his former colleague, Secretary Robert Reich, the former labor secretary under President Clinton, has come out and acknowledged corporations don't pay taxes, people do. And all it really does is it creates this insidious opportunity for politicians to play games, to create winners and losers, to have manipulative deductions and loopholes and write-offs. We shouldn't have any of that. Let's have a transparent system. Let's not tax corporations. Let's allow them to compete most aggressively on the global economy. It's better for our workers. It's better for our economy. It would attract more capital. I think the solution is to eliminate corporate taxes altogether.
Jason, what about eliminating them completely?
Well, corporate taxes are certainly paid by people. They're probably paid disproportionately by owners of capital, which are higher income people. Whether you think that's a good thing or a bad thing is one question. Every economy has a tax on corporations. It's an important part of our tax system. You'd see people, for instance, turn themselves into corporations to avoid paying taxes. So the real solution is not to scrap them, but to make them work. And there are ways to do that. To tax capital consistently, tax it across the board. Don't give people who finance their investments with debt a negative tax rate the way we do it today and double tax them on equity. You should tax all income once and only once. That's what we should be striving for.
You know, Pat, in this environment, though, what are the odds that reform would occur?
Well, you never know. It's a tough thing to say. But right now, look at what the things that Congress is talking about doing. They're threatening to launch a trade war with China, which would be devastating. And so much is driven by anxiety about American manufacturers and American jobs. So if we can have a rational discussion about this, I mean, Jason and I actually agree on a lot of elements of this. You know, a rational discussion can only lead to the conclusion that we should have a simpler tax code, and the rates at a minimum much lower. I'd prefer none on corporations, but much lower would be better. And there's plenty of examples. Back in the mid-'80s, when Ireland joined the EU, it was one of the poorest countries in all of Europe. It dramatically slashed taxes, diminished the size of the state government, and today they're one of the richest countries in all of Europe, a thriving economy with a marginal corporate tax rate that's about 1/3 of the U.S. corporate rate. We need to be competitive with countries like that.
Okay. Jason, you get the quick final last thought.
Ireland did a lot of things right, including investing in people, education, technology, and I'd like us to see us take competitiveness as a broader issue than just the tax rates facing corporations, and what we can do to invest in our people and our technology.
That sounds like another discussion to have you both on and talk about. Thank you both very much.
Thanks very much.
Jason, Pat, thank you.